going on, everybody? 360 Digital Closing Bell here. I am your humble correspondent, Michael Tanner, joined as always for our week look back in oil, episode number 22, here on this beautiful June 5th. Thank you as always for our director and publisher of Oil and Gas 360.com, Stuart Turley, for joining me. Stu, how you doing today, my man?
I'm doing fantastic. We are ready, and we've had a busy week.
We've had an insanely busy week. We have a great show lined up. We're going to talk all different types of stories here. If you're an oil trader, we've got a crazy story that we're watching on oil inventory adjustments. Concho and Poineer fire jabs back and forth on adding rigs. Stu's got some great stuff on the international news deck. I think Bloomberg copied us. They read our podcast and did our executive compensation. So we'll dive into all of that, as always, with the oil levels and check in on the 360 official, non-official fund. But first, this show is brought to us by our friends at Adamantine Energy, who are really asking the question, what is social risk for the energy industry? It's not just community opposition to development projects. It's everything from the success from the divest from fossil fuels platform to how investor engagement on ESG programs to individual states and ambitious climate and decarbonization agendas. They're an unbelievable company, and Adamantine Energy is the leading consultancy that's helping oil and gas companies prepare for all of this social risk. They're led by Tisha Schuler, who's the former CEO of the Colorado Oil and Gas Association, and she is an awesome friend of the show. We love chatting with her. You can look at an interview that we did with her about 3 weeks ago to kind of get a flavor of what she's all about. She also has a podcast that'll be launching next week called Energy Thinks Podcast. I'm actually in the process of doing a lot of the production for it. And I'm telling you, there are some powerhouse interviews she's got going. So I check that out. You can check out everything for Adamantine Energy at energythinks.com. She has a great weekly email that if you are not already subscribed to, joke's on you, because your competitors are definitely reading this. It's the best email that you can get in your inbox every week to keep you updated on what's going on with the ESG as it relates to the energy space. It's called Both Things Are True. She does an unbelievable job about breaking these things down. You can also subscribe to this show, the 360 Digital Closing Bell, on iTunes, Spotify, YouTube. Follow Enercom and Oil and Gas 360 on all of the platforms, Twitter, LinkedIn, Facebook, Google+, wherever social is, we are here for that. Please connect with me and Stu on LinkedIn, Michael Tanner and Stuart Turley. The Energy 360 Network by Enercom, which you can find on the world's greatest website, www.oilandgas360.com, is the best place for oil and gas thought leadership. We have some great interviews that'll be coming out. We dropped 2 ones this week. Alex Epstein was really good. We also dropped, that was on Wednesday. On Monday, we dropped one with Crossroads Strategic Advisors, which was a wild episode. I recommend checking it out. Next week, though, we have a great interview. We sat down with Heidi McCullough, who's an ESG person in the Canadian space, and she has a very interesting flavor. She directed a really, really awesome YouTube movie that Stu, you actually watched the whole thing, right?
Oh, absolutely. It was phenomenal. Learned an awful lot.
Yeah, she is awesome. We enjoyed chatting with her. She's, again, in the ESG space, and her big chat was, and really the vibe you get from all of these people in the ESG space, specifically when we sat down, we had an internal chat with Enercom this week, is education in the ESG space is huge. People need to be educated on actually what is going on when it regards to all of this environmental social governance that we talk about. So that was the big thing we chatted about was, Canada's obviously more resistant to oil and gas than the United States might be. How do they navigate that and the education process that goes behind it? So it's a fascinating interview. We also just today cut a great interview with Buddy Clark, who's a partner and the co-chair of the energy practice over at Haynes and Boone. We love Haynes and Boone, obviously, on the weekly energy tracker. And if you tune into that every Tuesday via Zoom, you sometimes might hear Buddy, and he wrote a great book called Oil Capital that Stu cranked out in like 4 days. What is that for? Do you have the book? Can you hold the book up? It's a thick one. If you're listening on YouTube, it is thick.
It is. I'll tell you what, Buddy is a great author and knowledge. You can tell by the notes that I was taking through this thing. It's a great read for anybody, because Buddy in his interview said history repeats itself. And there you go, right here. It's a great book by a partner from Haynes and Boone.
It is a great book. If you're interested in the history of sort of the oil and gas space, how it came to be from specifically the financial, legal, and capital side, highly recommend checking out that interview. That will be available on the world's greatest website, www.oilandgas 360.com. But I think it's time to shift gears and whip around the oil field and chat about what happened this week. So much good. So I don't even know how we're going to cover it all here in this first part because there's so many good things. I think the biggest thing that I want to start with that I mentioned was obviously last week. If you listened to my show, I was bullish on, I was bearish on oil. We took out multiple positions on the short side. I was completely bullish, and we got taken to the cleaners on that one. We exited early, a nice $1,000 loss on the crude oil side, which is fine. That's what happens when you play the portfolio. But really Monday, Tuesday, Wednesday this week, sentiment shifted. I think people were bearish maybe coming into the week, but quickly it shifted to the positive side as a lot of COVID-19 stuff came out that was very positive. Demand started coming up. We saw transportation numbers go berserk. So a lot of interesting things were happening on that side to help the demand come back a little bit. And one of the interesting things that happened on Tuesday was Concho came in. And this is sort of, we've been wondering at what level companies are going to start turning on, not just productions, because that's the one big thing, but start drilling again. We mentioned on the podcast about 2 weeks ago, it's like 40% of the United States oil production was drilled within the past 15 months. So when you talk about the decline of new wells coming onto as they become more mature, when you're not drilling, you're losing those huge production numbers that come on. So Concho actually had a securities call, it was sort of like, we call it an investor relations call. I mean, it's clear Bank of America does their hedging, joke to joke. So if you're trying to sell hedging to Concho, know who you're going up against, Bank of America. So that's kind of why you can get them on this call, or Bank of America is able to do this. So they get on with their investor relations, and there was, a lot of different nuggets that came out, but the biggest news item on Tuesday that came out of that was Concho's admission that, not admission, but statement, and I think it's an admission. You should keep this to yourself, and it's an admission of we're not quite sure where we're going. But they have decided to add 36 new wells by the end of 2020, specifically in the Permian Basin. You can actually go on their it's for the 2020 Energy Credit Conference. If you go on Concho's website, you can take a look at the webcast. You have to type in your email, so I've been giving them fake emails all day long every time I need to get back. And I'm not giving them. I don't need to be in a Concho email drip campaign for all of their webcasts. That's the last thing I need. So we've been giving them the junk mail, but when you dive into the slides, what you can see is there's 36 new wells, all ranging from Bone Spring down to the Wolfcamp B. So they're going to kind of stack about 10 to 15 wells each level down from Bone Spring to Wolfcamp B, which is sort of the most productive stuff, especially when we talk to our experts out in the reservoir. Those are sort of the pay zones when you get down into the Permian right there. So Concho adding rigs. And the interesting part about that was they're sort of the first company specifically in the Permian on the E&P side to come out and say that, which is, who knows? Let's see who follows that. The interesting part was we ran this on the closing bell today, actually. Joke's on you guys. This is a Thursday afternoon we're recording this. So if you're listening to this Friday morning, we ran closing bell for Thursday about 2:00. My one big thing there was Scott Sheffield coming out and saying basically $40 oil is the time where exploration companies can balance their books but not add rigs, and basically called out Concho without saying their name, but specifically said they're a competitor in the Permian has decided to add rigs. This is not the time to be doing that $40 oil. It's kind of I don't know. It's kind of a shot in the heart when you got a really large CEO of a company that could probably take to spend some money, come out and say $40 oil is perfect. We're not going to do anything. We're just going to balance our own books. I don't know. It would be not, because really it's the service companies that got hit hard. So that was, that's the interesting thing that has shifted. I think in this week is the sentiment of oil. I think, last week, I think it was bearish. This week, I think specifically with Concho coming out saying they're going to add rigs. I think, Scott Sheffield, who's, the most, probably outspoken CEO of a mid to large cap oil gas, coming out and specifically calling him out for. It'll be interesting to see the dynamics play, and if any companies come out and either follow Scott Sheffield's lead, saying, no, this is a time when we're going to rebalance our books, or if they're going to come out on Concho's side and say, hey, we're going to add rigs and continue to add this production so that we can take advantage of, this price moving upward. They didn't bring off. It's only about 1 million barrels we brought offline. That's nothing in talking about 100 million barrel oil market. I know demand comes back, but we're talking about a 3, 4, 5 month plan, especially if you're drilling 36 wells. That's not happening tomorrow. So that play is coming up. So that's really, on the oil side and the sentiment side, those are the two big things I'm looking for. What you had something you want to chat about, Stu?
Yeah, there were two articles that came out. One of them was today, and then one of them was Tuesday. And that is the one on Tuesday. The Trump administration gave uh, had a ruling basically that said
Hmm.
that they're going to allow, not going to allow New York to stop oil and gas pipelines anymore, which
Hmm.
means we can get gas from the Marcellus. Let's get gas to the eastern seaboard, and let's not buy Russian gas for New York. So I thought that was a really good one from the Trump administration, being able to save jobs in the US for the oil company.
Yeah,
The
and
other one
I
that
mean, along that note, one of the biggest things that we've talked about here is how we're, I'm, specifically I've talked about is I'm anti-government getting involved in free markets, and there was a lot of talk early on, and we covered it, of the different types of government intervention that could happen. And I will give the Trump administration credit; they have done a good job of intervening when necessary and pulling back and allowing the markets to work when necessary. I don't, you don't hear that, I think, often said, but I think they've done a good job of balancing when to move in and when to move out. And I think this move by the Trump administration to do exactly what you talked about, I think is a testament to that. This is the right time to move in and actually do some sort of regulation to help people out.
And the next one that came out today, we don't have all the details, but Reuters released it in saying that he's going to have an executive order that's going to release it for federal agencies for emergency power to do all major energy infrastructure. So it's almost related, but it's even more than that. I would love to be able to say, let's get our Canadian brethren pipelines down here. And I would love to see this executive order take part of that so that we can offload some of the natural resources from Canada.
Yeah, no, I think that's a big thing, and another thing that I noticed this week is, on Monday we chatted about executive compensation, and we, is what I think the
Oh,
joke we can't, I think the joke,
chatted,
I think
chatted.
we didn't quite chat about it. We dove in, we went into it a little bit, but what was the do? We said we did what must be done. And we talked executive. Well, I'm pretty sure someone at Bloomberg was listening, because they come out with their own um, basic article that walks through sort of the same stuff that we did. They focus on Whiting, Chesapeake, and Diamond Offshore as companies who have not necessarily done the executive compensation game the right way. Really, when and they get into Oxy, a bunch of all this stuff. I just think the one thing that you know these articles, and specifically this one, this was a lot more harsh. They got into how much they're getting paid an hour to do all this. I mean, it's really a fascinating article if you're interested in some of the minute details, but none of these articles fail to bring up companies that are actually like doing this right. And that's sort of my one big takeaway, because yes, executives are getting overpaid in some instances, but they're also not in other cases. So I think it's a can of mixed bags. You can focus on. It really depends how you fall, but obviously Bloomberg's listening, so we'll thank you guys, if who's ever out there listening for us, but we appreciate it. But you can check that out. We'll have this on the Oil and Gas 360 news desk if you want to dive in a little more to the executive compensation stuff. The other thing that's been really interesting in some of the rumblings I've been hearing is talking about the crude oil supply adjustment, and this is something that if you're a hardcore energy trader, you're very familiar with. So, if you're wondering, as you know, every week we do supply that when the DOE comes out and gives their crude stocks, that gives a bunch of different numbers, distillate demand, all of these specific numbers. And what's funny is they give you all the numbers as if they're exactly the numbers up until the spliffing date. They don't necessarily, well, they specify, but they're just presented to you as that. Well, crude oil stocks, crude oil demand, utilization, all those jazz, those are up-to-date numbers. But remember how they have crude oil production? Crude oil production, I've been banging my hand on the table for, it needs to go down. It needs to go down. We've been looking at, specifically when we're trading the DOE crude drop at 830, we're looking at that domestic production number, because that's a sign that oil is coming down, help balance out demand. We've been there, done that, covered it. But what's funny is that number that they drop isn't actually the production that's happening for the week. it's an estimate based on an energy supply outlook that EIA runs, that base does some energy modeling, but also takes into account news that has dropped. They survey large companies and say, okay, what's actually going on the floor? So if you're an energy trader, you know that, and it doesn't necessarily change the fact that you're trading on the number, but it becomes interesting when they come back and they actually tell you what the production is about. It's usually about a 3 to 4 week lag in when domestic production drops due to the energy model on Wednesday every day at 8:30 to when they actually roll in the weekly data. And it's called the DOE crude oil supply adjustment, and they adjust it every time. And to be honest with you, for the past year and a half, the supply adjustment has always been on the positive side, because if you think about it, there's so much associated natural gas being produced in the Permian and specifically the Eagle Ford that a lot of the crude oil that's mixed in with there just gets burned off and not counted. So, if you follow the weekly energy tracker, this is something that Aaron Vanderford, who's the president of Intercom, covered 2-3 weeks ago. He was mentioning the effective rig count versus the effective production rate. And so there's, the EIA misses, sometimes 1 million barrels a day, and they clearly admit that. But it's to the north side. They miss 1 million barrels, and that would make sense. There's a lot of different things they can't make. But what's been happening the past 4 weeks is the average crude inventory supply adjustment has been negative 980,000 barrels over the past 4 weeks on a daily basis, which is almost 1 million to the downside, which is absolutely crazy to think about. I mean, you occasionally see spikes down. I mean, in July and August, we saw 2 spikes down right below, only to about 300,000 missing. But for the last 4 weeks, it's taken an absolute nosedive, and traders they're wondering what's going on here. And it's really,
Michael, do you think that that's a conspiracy theory going on?
No, I mean, I do love a juicy conspiracy theory, so I'm never one to dismiss it. Really, I mean, what the article that that's really talking about this, they mentioned production and these large swings in data that's coming in, it may all be the culprit. And the problem is when all of a sudden now companies begin to shut in, and, this sounds funny, but, most companies, they're not checking every single day what their production is per se. You're not checking it every single day. That's not necessarily the part. They're checking it maybe every week, but they're not looking at from a total perspective. What's my total and maybe there's somebody in the company doing that, but he's not talking to the EIA. He's not the one that when the EIA sends out these surveys, it's just the person who's responding to these EIA surveys. It's the investor relations guy. And love those guys. We love investor relations guys. Absolutely love them. But they're not engineers. So, they're not, they have a whole nother business that they're trying to run in managing the financial outlook of a company where, so maybe there's a production manager who's got that number, but it's not keeping that up to date, that the information doesn't necessarily travel that quickly per se between levels, just like any big company would. So, does Mark Zuckerberg know every single day how many users Facebook has? Absolutely not. He might get an update every week or every couple weeks, but he's got bigger fish to fry on that front. So do these oil CEOs. So when you're seeing these swings on the negative side, a lot of that just has to do with probably more good data is coming in, because for the first time in years, actual overall company production has been a corporate C-suite priority. And a lot of these, now a lot of these numbers are actually getting reported on more of a frequent basis. So I think that's partly why I think you're seeing this swing on the crude oil supply adjustment. But that's something that if you're a trader, we'll continue to watch for and cover on this. Do you have anything else, Stu? Because I've got one more story-ish we can cover. You got anything else?
Well, the only other thing is we did have that article come out by Kevin over at Rare Petro last Friday. And it really was an outstanding worldwide look or story on crude oil storage. So that's up on Oil and Gas 360 as part of that goes as well too. So just wanted to give that one out. It covered a lot of storage facts around the world and how much of it is actually coming in.
What are some highlights? So give me a highlight from it.
There is a ton of floating oil storage coming in. 43 million barrels of Saudi oil is set to begin arriving on May 24th by Rystad. There are 14 very large crude carriers, including 76 tankers about ready to unload. So
Ooh.
the bottom line to this is any shut-ins we have done is being eroded by this floating flotilla of storage coming in from imports. It's
Yeah.
not good.
No, it's not good, and especially if the industry takes the Concho approach, like they mentioned on Tuesday, and starts adding rigs. Now, I mean, that's good. It's good for business. It's good for service people that are laid off. I know, I have friends who work in directional drilling who would love to get back into and start working again. But it's a dicey scenario when you have all of this production coming back. It's kind of why Scott Sheffield, I mean, as savage as this sounds, Sheffield's probably right. $40 is the perfect spot to balance your budget, but you don't have to have the pressure of adding rigs because it's still spicy. So, he mentioned 45.50 as being that magic rig number. It'll be very interesting to see what oil does. I mean, right now it's 37, 33. So, I mean, we're still a couple bucks away from 40, but we're getting into that range where maybe these budgets are going to be a little more balanced. What do we have on the international news desk side?
This week we had two really interesting stories. Kind of weird they were both in Australia from a standpoint, but first one
We
was
love our Australian listeners.
we do. We have a very big worldwide following now, which is pretty cool. In Sydney, Peabody Energy is a coal producing
Yep.
company.
I lived with
And
one of my roommates in college is a Peabody Energy coal mining engineer up in their Wyoming facility. It's
oh,
where is I forget the name of it. It's like Shoshone, not Shoshone. It's up there at Green River, up in the Green River, Wyoming
yep.
mountains. He's at a big coal mine.
Oh, that's fantastic. But there's two types of coal and coke coal. And
Okay.
coke coal is for steel production. Oh boy, you missed that one. I was trying to give you a bone. So on steel production is gone down dramatically worldwide in markets. This is only a systemic showing or numbers of what's going on worldwide with the oil COVID domino effect that's going on. I guess we could call that the oil and gas 360 oil COVID domino effect. It's going across the world
It's
right
on
now.
brand. It's on brand.
It's on our brand. So that was one of them that I thought was just amazing. Peabody had already closed one of their mines. Now they're laying off another 1/3 of their employees over there. So our heart goes out to them, but it's a systemic evidence of more problems coming around the domino theory. The other one is Shell put out the sale of the $2 billion plus stake in the Queensland's
Yeah, I saw that.
LNG. So you take Shell, they're needing the cash. What's a couple billion between friends? And LNG is really in the Asian market still going to be a wildly needed product. And with LNG, the plants over there in Australia, this is a big deal.
Yeah, well, I mean, the LNG market, that interview we did with Sproul and Chris really hit home for me the importance of that global LNG market. So this is an interesting deal for Shell getting out. Be interesting who comes in as the buyer. Do they say who's interested in buying?
I didn't see that, but did you know who the minority owners were in this?
Who is it?
China National Offshore
Oh yeah.
and Oil Corp Tokyo. Now, the other article that I told you about on the international news desk was China offshore was starting to ramp up production in order to use internal oil as well. So we've got just a ton of weirdness going on in the world.
No, I think people are, specifically, you know, we may be here, it's just a lot of stuff going on right now. We're too busy over here in terms of all the new stuff. So please, if you have any other things and other news articles that you want us to cover, please, you can get a hold of us, mtanner@intercominc.com. We always love it. But I think it's time to move into the levels for oil this week. As always, this segment is sponsored by Sandstone Capital Group. These guys do insanely good energy research, and they provide all of the levels and stories from their energy group solution. Just check them out, www.sandstonecg.com. Give them a call, 949-561-1818. I mean, really, when we look at oil this week, as mentioned, I was bearish. That was clearly wrong come Tuesday. And it was a quick, I think it was about noon on Monday. I think I messaged you after the podcast came out and it was like, I got it wrong. Flip. We're bullish for the week. And then I think Tuesday is when I dumped the shares that we had in the 360 official, non-official fund. So point of control has moved up for the 5 days all the way up to 36.79. This is crazy for me. If you told me 2 weeks ago that the point of control is on a Friday is going to be 36.76, I would have shot you and said you're not doing it right. What do you tell them? We're going to be, but it's been an insane bull run over the past 4 weeks. 3 weeks more, say. Point of control, like I said, 36.70. That's where a fat chunk of volume is. If you're a bull if you were a bull moving into the week, we'll cover sort of the big levels. The key levels for this week that we saw were 35, 35, 36.79, as we mentioned, is the point of control, and 37.13. The top for the week actually was 38.15. That got hit yesterday. So 38.15 for the cap on the week. Just crazy. Like we mentioned, we could see 40 next week. And if I had to guess, I'm going to put oil at $40 next week, but you're going to have to tune in to the 360 official, or you're going to have to tune into the 360 closing bell on Monday to check all of that out. And remember the EIA numbers, they did come out this week. Remember Friday we had a 200,000 barrel drop in the production numbers, which is probably, as we mentioned in the story, probably a little more accurate now that some of the domestic stuff. Crude inventories did drop 2.4 million barrels, though. Cushing lost 1.3 million barrels, which is a good number on the actual U.S. storage side. So, going forward, I don't think Cushing storage is going to be an issue. And, as much as we'd love to see negative pricing again, as fun as that was to watch that on the charts, I'm not sure if it's good for everybody else. So we don't think that's going to happen again here on the podcast. Anything else for the levels for the week here on oil before we move into the fund?
I'm good.
Good.
Lots of storage.
Lots of
floating
storage. No, floating storage is going to be something that we are watching on the podcast. We appreciate Rare Petro, and they do some really great analysis work, specifically around the global energy market. So I'd always check them out, www.rarepetro.com. I think it's time to go ahead and just move into the 360 official, non-official fund. But as always, the lawyers make us say this so we don't get sued. This segment is for entertainment purposes only. Everybody on the show, i.e. me, Michael Tanner, and Stu Stewart Turley, we invest money for our own account. We do not manage any outside money. We do not give investment advice. We do not offer securities or have any involvement in the regulated side of the industry. Remember, investing is risky, and you can and will lose all of your principal. That being said, Stu, how's your side of the portfolio going?
Doing okay. I'm back. I jumped back into
very, very enthusiastic.
Yeah, but I jumped back into Rattler real quick and Oxy.
You did.
Jump back into Oxy. Both of them. Take a look at the charts. They're really pretty good for some day issues there. Now, Tomcat coming up on his picks. He's saying we are at the top end of the market totally, and take a look at in the next week or two major sell-offs. So he's
Tomcat's got sell-offs for us.
Yes, Tomcat's thinking we're at the top.
Well, I mean, not to be creepy, but we had 5-6 days of gains just in the equities market in general. If you've been following the closing bell live on YouTube every single day, 2:00 Mountain Standard Time, you get YouTube at Entercom. But markets have been up, specifically in the overall equity space, and the sentiment that came out today and all the stories on the flatness of the market was, it thinks it's getting a little high. Specifically if you're looking at he's probably looking at S&P 500 RSI, which is relative strength index. It's about an 85 right now, which means it's overbought, which means a sell-off might be coming. So, from a technical side, that's probably what he's seeing. I like the Oxy pick. I actually think they're a little wound up a little bit. And if we do see oil continue to rise, that's only going to help them out, because part of the reason why I think they've been hit so hard is because the oil price, they've been so dependent on oil price with this Anadarko acquisition, obviously being burdened down by all of this debt. So, but it's been good to be watching for Tomcat. So now I'm a little scared. I was bullish this week. But we'll have to evaluate this. That's the beauty of the Friday show. We can evaluate, and we'll come back with you on Monday with our picks on how everything will look for the next week. My side of the fund, Bonanza Creek, just doing very well. It's up to 18.94. Remember, we got in at 14.89, so a really nice looking performance of the fund. Canceling out my two shorts that I did on CL this week. We got in at 35, and we are out about 36.15 on both those contracts. That's a nice $1,500 dip for the pot, dip into the portfolio, unfortunately. So I think right now we're about flat in our 100K portfolio. We are revamping the 360 right now on the website. It's the 360 digital closing bell page. We're doing a complete rebrand of it. We're calling it the Oil and Gas 360 News Desk, and it's going to have everything. It's going to have all the podcasts, both the long form and the 5-minute shows. It's going to have all of our charts for all of our picks. We're actually going to start allocating money, because we can do this through the widgets on the portfolio. So we'll be able to see, hey, our portfolio's up 3% today, down 4% today. So we'll be getting all of that rolled out here to you in the next couple weeks, but I'm excited to get that to you. Natural gas is about the only other thing that we have in the portfolio right now. It's pretty much flat. Our interest point was $1.78, currently trading at $1.82. So we made some cash there on the upside, but not quite enough to say let's go and keep it. Remember, we're going to keep that as a long-term hold. Every expert we interview keeps telling us $3.50, $4 great. What's the Kreskin got for it today?
Don't know yet.
That's funny. So, and a good show today, Stu. Do we got anything else for these guys before we let them go here?
Buckle up. It's going to be a rough ride.
Yeah, it's only going to continue to get crazier and crazier. So just stick with it. We feel like the 360 digital closing bell is the best place to stay up to date on all of your energy market stuff.
What we do have is some changes in our analysis coming up, so you're getting even more detailed with all your analytical skills. So not to give anything away, but you're getting a lot of resources there.
No, the resources that come with being in the power station, as we call it here on the closing bell, has been unbelievable, and we appreciate all of the help. And with that, we're going to go ahead and let you guys get back to work. Remember, if you're listening to this in the afternoon on Friday, feel free to take the rest of the day off. It's our life to you. You can go online and download our work from home or a permission slip that gets you so that you can skip work signed by us. It's legit, don't worry. But we'll go ahead and let you guys get back to work or finish your day. Thank you for checking out the 360 digital closing bell. We will see you guys this afternoon for the digital ticker and Monday for the closing bell.